What's up, guys? It's Blake from You've Got Tech. I'm checking in because we all know if you're watching this video, you're a market participant. So, if you've stuck it out this whole time after a shit 2022 where the indices were down more so since any year from 2008, then you're excited for tomorrow because you're still in the market. You know, if you're a contrarian and you're betting against the market, tomorrow's probably not the day for you. But if you're still holding long positions and you're betting on America's future, then tomorrow's probably a good day. Now, according to estimates, analysts are expecting a 6.5% inflation read tomorrow on headline. Core, I believe, is expected 5.7, 5.8. You know, month over month, I believe they're looking for a 0.3 for December. Of course, December's CPI data, which we get tomorrow at 8:30 in the morning, which is the reason for this video, is expected to be a bit of an outlier month. You know, obviously it's the holidays. You know, most of the people did their shopping in November, so people are thinking, okay, you know, maybe we continue the trajectory down, the right direction for inflation, right? The right direction to keep Mr. Powell happy, Mr. J. Powell, so that they can turn back on these money printers and, you know, maybe change their mind a little bit on how much they want to strangle the markets. So, you know, with 11 straight months of real estate declines, you know, and refinancing at the lowest point in the last 20 years, you know, I'm thinking that they might be tightening a little bit too much. So let's get my seatbelt on so that this thing stops beeping, so that I'm not demonetized for, you know, encouraging dangerous driving. But yeah, so to stay focused, tomorrow at 8:30 in the morning, at 8:30 Eastern, we're getting the inflation read, right? And then next week, I believe we have PPI, producer price inflation. It could be Friday, so I will double check on that. But we are expecting core inflation to be 5.7 or 5.8. Last month it was 6%, right on the nose. You know, we've had 2 straight months of missing to the downside, which is fantastic. You know, let's get a third. My favorite finance guy on YouTube, I'm sure most of you guys have heard of him, and if not, please check him out. He is life-changing. At least for me, he's been life-changing. His name is Kevin Paffrath. He is the Meet Kevin YouTube channel. However, he was saying basically if the Fed, you know, if J-Pow sees 5 straight months of a miss to the downside on inflation, that we should be looking to, you know, see a Federal Reserve that's a little bit less hawkish, a little bit more dovish for us here. You know, I think markets might appreciate a Fed pivot, you know, not a Fed pause where they just, you know, go into and out of a meeting with no raise, no hike, right? You know, the target range right now is between 4.25 to 4.5 for the Fed, you know, federal funds rate. You know, so the next meeting, I believe, is in February, February 5th or February 3rd. So they will have this inflation report as well as last month's to have looked at since the last meeting. There may just be one more CPI before the next meeting. So they would have at most 3 months of CPI data to look at based on the next meeting. Now, the next meeting, they're expected to raise rates another 50 basis points, but best case scenario, it would be another 25 basis points. However, everyone's concerned, okay, is the terminal rate, right? And that just means where is the Fed going to pivot? What is the highest they raise rates before they say, okay, we're entering a recession? We're already in a recession, right? In many, many sectors of the economy, if not all, right? So, I mean, you know, you could say energy is not in a recession, but whatever. I mean, just in general, you know, you have hospitality and leisure and hospitality that's leading the markets right now. So those 2 sectors, they're not in recession. But basically, the market's concerned, okay, are they going to keep rates this high through 2023, most analysts, JP Morgan, all these big banks, right? They expect we're going to keep rates this high and continue hiking through through the middle of 2023, but keeping rates this high through the end of 2023, and that they're not expecting or forecasting pivoting and, lowering rates until 2024 at the earliest. But at their last meeting, the last summary of economic projections, just last month, J-Pow says we're going to have to keep rates high for a lot longer than we expected to fully and be thorough in eradicating inflation to achieve their dual mandate, right? They're worried about keeping, the labor force a little bit less tight than it is now. There's the other end of the mandate being, of course, 2% inflation over the course of, because it's flexible average inflation targeting, FATE. Basically, they're trying to keep it 2% over averaged out inflation, and so obviously they have to keep rates high for longer, is what he said, right? But he said, and all the members of the Federal Reserve, there's 11 different Federal Reserve banks, all of the members in unison expected not to lower rates until 2024 at the earliest. And market participants are saying, you guys are on crack. Like, you're on something. If you think that you have, strangled markets for a year already, and you're going to do it for another year and a half, no. Sell down your balance sheet, run off the balance sheet, sell your $8.5 trillion of mortgage-backed securities, do what you got to do, but you're going to have to start stimulating markets again in 2023. So if we get 5, this is what my point goes back to. If you're getting, we've already had 2 misses to the downside on inflation, making them look like they've over-tightened already, right? So, and the labor force is still tight, right? So they haven't succeeded in that regard either. If we get another 3 CPI readings, including tomorrow, so 2 after tomorrow, missing to the downside and by a good margin, then they're going to have to pivot by the middle of this year. I mean, really, by 2 meetings after this would put us at the May meeting, because they have February, April, May. There's no meeting in March, I believe. So by May, we may see the Fed pivot. And then what do they say? They say, to the moon with you. It's a reference to the honeymooners. But I'm not sure how many of my viewers are in that demographic that they would have understood that reference. Anyway, let's blast off. Let's get ourselves some serious bread. Let's pack our wallets a little bit. Let's take some of our cash that's been stockpiled on the sidelines and put it back in the market. Let's see our 401ks and our retirement portfolios healthy and sustaining growth at a reasonable rate. Not crazy 2020 gains, 2021 gains, but the typical 8-9% returns on a yearly basis. Let's get back to normal. At my job today, we finally took down the plastic dividers on the desk between the customer and the employee. Let's get that energy back. Let's reopen in China. Let's get some demand. And let's fill some of the gap between, roles open from employers and employees to fill those gaps. Let's make America... What? Let's just get America back. Listen, I don't want to be political. I don't have to, hedge my bets to the left or to the right. However, I think we can all agree, at least when it comes to capitalism, at least when it comes to our retirement portfolios, at least when it comes to our gains and the money in our wallet, let's have some success. Let's go to the moon. Let's look forward to tomorrow. God bless.